Alright everyone, and welcome back to the channel for another Kadena update. So, as of the time of recording this, Bitcoin, the stock market, cryptocurrency and Kadena alike are getting absolutely nuked after Jerome Powell's speech. If you want to learn more about why these markets are tumbling and what happened with Jerome Powell's speech, be sure to check out my last Bitcoin video, Bitcoin Nuke Now. But for this video, let's check out what's going on with Kadena. I want to start off with a couple of chart patterns I see with some predictions, price predictions in the immediate short term, where I think we're going, where I think we're going to be in the next week or so. And then what I want to do is look at some higher time frame predictions. If you're a veteran of the channel, welcome back. You would have remembered that I've been calling for these $1 Kadena price targets for months now. What I'm going to do is I'm going to re-look at these bearish price targets because we've got some new areas of confluence, and I want to let you know whether I think my $1 Kadena price target is either too bearish or too conservative. Let's jump right into the video. Alright, so starting off on the daily time frame, if you are a veteran of the channel, you would have seen this chart before. Before we do jump into some of the support and resistance ranges, I want to just give a quick update on the Fibonacci's and see where we are. So starting off from the higher time frames, let's look at our most recent swing high down to our swing low. If you're new to the channel and you're wondering what this orange box is, first of all, warm welcome. This is the Fibonacci's between the 0.5618 and 786 Fibonacci's. When you are in a downtrend, it's very textbook that you come down to new lows, you come back up to this orange box, retest some of these important Fibonacci retracements. For example, here we almost came up to the 61.8. We probably came up to the 0.6. So we retraced about 60% of this move from the high to the low. And then we're obviously coming back down to the downside. So you can see, once again, price is magnetized to the orange box before the next leg to the downside. Looking at our most recent swing low to swing high, this is the area that we've come back to. So once again, swing low up to swing high, you get pulled back to these orange boxes. And if you do continue with your uptrend, you need to hold the 786 Fibonacci. That's basic fibs. I'm sure most of you know this already, but where is your last line in the sand in terms of the Fibonacci uptrend in play at? It is at the 786 Fibonacci, of course, at $1.62. What area are we currently at this moment in time? Well, Kadena is at $1.60. We're currently pushing beneath this, and I would say, if we close a daily candle beneath 160, then it's a wrap and we would be done. But if we actually do pull up the 618 or the 786 rather, again, swing low to swing high, we have had previously a daily candle body close beneath this that didn't do anything. So I'd be looking for a weekly candle body close below $1.62, meaning if we are trading beneath 162 on the opening on Monday, we're going to go to massively lower levels. According to this chart, let's jump right back into this. Once again, you can see a bunch of previous support resistance ranges. It doesn't matter too much about all of these anymore. Now we are breaking through our last lines in the sand. You can also see this intersection of this breakdown when we do connect these legs is coming in at, once again, 162. So our last line in the sands in terms of this uptrend that we've got going on is also coming in at 162. I previously just had this, but you can also see there is a case to be made for drawing another trend line one leg beneath. There is no other case for really drawing anything else. I mean, this is a stretch. This is not a stretch because you have had 3 touch points on this, but with that being said, you've already wicked beneath this and you're currently hugging it right now. So really, your 786, you've got a trend line here. This is where the most touch points are. This is where the most fibs are. This is where the confluence is. This is the major area you need to hold, 162. You close a weekly candle body beneath that, you are going to get rocketed to lower levels. Where are we going to be going in the short term after that? Back down to this green box, you've got touch points between the ranges of $1.42 all the way down to $1.35. In the immediate short term, in the next week or so, I'd say we'd be coming down about 11%, potentially as far down as 16%. And this is not even the bearish price target, because you can see as you come beneath this floor, you're basically in price discovery to the downside. At least in local time frames, obviously bear in mind you do zoom out, and Kadena has come from very low valuation. So we have been at these areas before, which is what brings us on to our next chart. Let's look at this price discovery to the downside area, and let's look at some of our volume profiles for the visible range over on the right side of the screen, and on our left side of the screen, let's look at some of the fixed volume profiles. You can see it's basically like a swing low to swing high. This is encompassing all of this data. This is encompassing all of this data, and the VPVR on the right side of the screen is just encompassing everything to the left all the way over here. Let's jump in. So at this moment in time, you can see on the VPVR, we had major support boxes right here between the ranges of 173 down to 154. We are currently still above that last line in the sand. We're at 160, so we're coming very, very close to our last level of support on the volume profiles. And this makes sense because when we look at our charts, you can imagine we do have some areas, you know, somewhere around about here where we have obviously had a decent amount of volume traded. You can really see this range here. This is what the volume profiles are telling us. They're saying, hey, we've got volume traded here, so there is going to be a tiny bit of support here. But what it is saying is after this range, we've got nothing else to the downside, and subsequently expect more volatility coming in as we do go beneath these VPVR levels. So what I would like to say is in the immediate short term, in the next week, I don't think it's going to be too volatile. And what I mean for too volatile in Kadena is my prediction is in the next 7 days or so, we're going to move down about 16%, which is not too volatile for crypto. You know, 2.5%, 3% move a day approximately or so. Something like that. But what I will say is the next leg to the downside after there will be brutal, because the volume profiles, they're showing support at 108. And when we do pull back up to this chart, you might be looking, if you're new to the channel, warm welcome. If you're looking at this green box and you're thinking, you know, there's price targets of 108, there's price targets of 105, $1. What is going on with these ranges? Well, let me show you. This is just basically a massive support range right here at $1. This is marked as the psychological price target, drawing from our fib here, swing low to swing high. You can see we've got a 1.618 fib at 84 cents. If we draw our fib from here, swing low to swing high, we have a 1.236 Fibonacci at $1.05. And then we've got more Fibonacci's at $1.08. I won't pull them up for this. We've got volume, we've also got, yeah, the VPVR, the fixed volume profile showing support at $1.08 as well. All the way down, the volume profiles are showing major support down here at 75 cents. So if you're wondering why there's so many touch points, so many lines in this green box, it's because of all those reasons. There's many areas in which we're trading in right now. And when we do look at the lower time frames when we look at the lower time frames, VPVR, keep on mixing up the two, you can also see there's not a lot of volume traded beneath these areas. So as you do slip beneath 160, especially on a weekly time frame, it's going to get a lot more volatile for Kadena. With that being said as well, with the stock market heading down and Bitcoin heading down, the more these head down, Kadena is just going to get absolutely slaughtered. There are a couple of other price targets that I would like to talk about before I do revise my bear market low target. So let's look at some of these that are going on right now. There's a few that I noticed over on these. Number one, you have a bear flag, and this is another one of our price targets that we've got. If we look over here, you can see 77. I think we previously measured this and it was around about 76. Yeah, around about here. This should be green because this is a price target, unless there was another fib down here, which is what I mean. There are just so many targets. Yeah, no, this was a price target for that flag. So as you can see, the bearish pennant, bear flag, whatever you want to call it, the breakdown would be down here at 77 cents. If we do remove that, you can also see, clearing this up, drawing it like this, you will also notice that this is a massive head and shoulders pattern. And with this head and shoulders pattern, the breakdown, not on a log scale, just so you know, the breakdown, once again, like I said, I don't necessarily think we're going to be breaking down today. Let's say we break down on Monday, which would be the 29th. This would be meaning Kadena would be coming down to 62 cents, which I do also believe I haven't marked. So I will mark that as another area of support down here. I'm just letting you know all the potential places on this chart that we can bounce from as potential support and resistance. The major areas are what gets included over on that chart. So a couple of ideas, and once again, I think we mentioned this already. But I will just mention it again in case I accidentally didn't mention this. But we've also got a massive M pattern that we have previously talked about. It's probably a lot nicer on the weekly. Debatable whether it's nicer on the weekly, but you can definitely see this beautiful M pattern. Where's the breakdown of the M pattern? The breakdown of the M pattern is going to be at 0. So this is not a price target that you would obviously take to the bank. I'm not saying Kadena is going to 0. I'm not saying that we're going to go anywhere near 0. Nonetheless, a breakdown of a massive head and shoulders, even though the price target's not going to happen, it is still not a good sign in terms of the TA. So that's what I think is going to be going on in the short term. I'll draw out something specific when I do wrap up this video, but as we're getting to the end of this video, like I said at the start, I want to look at my bear market low price predictions and talk about whether I think they are too conservative or too bearish. So right off the back, once again, veterans of the channel know that round about this $1 mark is what I've been calling since, I think, around about $6.50. I've been bearish on Kadena since I started covering it at these regions, and $1 is where I've been saying, at least for the past couple of months, at least for the past couple of months, the past few months, I've been saying we're going to come down to $1. This is only a 37% drop to the downside. Now, you might be wondering, you know, where specifically in the KDA chart would you start buying? And this is where it gets tricky, because I will also be looking at Bitcoin to help me decide whether I think the bear market low is in, and I will not be buying Kadena until I think Bitcoin is very, very close to its bottom. So if we look at what's going on with Bitcoin right now, you can see this is the current low that we've got around about 17,500, and where I think we're bottoming at the start of my ranges is around about that 16k region. So let's draw it down to 16k. You can see this would be about a 22 to 23% drop from where we are over on Bitcoin. Now, what's interesting about this is the retracement back down to our lows is only a 15% drop, and the retracement for Kadena to come back down to its lows is roughly about the same, a 15 to 16% drop. What I think is going to be happening first is Bitcoin is going to come back down, and it's going to be getting ready to break beneath these lows. And at that period in time, when Bitcoin is sub 17k, I can't emphasize that enough, when Bitcoin is sub 17k, that is when I'm going to be looking at potentially buying Kadena, because hypothetically, let's say that Bitcoin comes down and it continues to break down. Let's say it comes down to 20k, you know, 19k, 18k, and we haven't even made new lows. Let's say hypothetically Kadena breaks all the way down to $1 while Bitcoin's still at 18k, 17.5, so it hasn't made new lows yet. I would absolutely not think of buying Kadena, because what I'm waiting for is for Bitcoin to make new lows. I think new lows will come, then the bear market will be done, and at that moment in time, that is when I look at buying altcoins. So with that being said, based on this, considering I'm expecting a 22% drop on Bitcoin, is a 37% drop on Kadena too conservative? Well, we can't answer that 100%, as always, until Bitcoin comes down to its new bear market lows. So I won't be able to tell you for definite if Bitcoin or if Kadena at $1 is a good price while Bitcoin is above 15,700 or 17,500 rather. But what I will say is when Bitcoin breaks beneath 17,000, that is when I'll be looking at making targets. And in my opinion, I think Bitcoin is going to break beneath its lows, and Kadena is going to become a lot more volatile than it is at this moment in time. So subsequently, I do unfortunately think $1 is going to be a little bit conservative, and some of the other areas that we talked about, you know, the breakdown targets, areas of support over on the VPVR and the fixed volume profiles, they start coming in at about 97 cent. I've actually marked this range down here between 97 cent and 84 cent. For a specific price target, let's just take something in the middle, 90 cent. I think 90 cent is going to be very conservative. There's going to be a lot of open interest at $1. But as you can imagine, you know, open interest, the price more or less magnetizes to that, and we could slice through it like butter. So with that being said, I do think potentially $1 is too conservative. I don't want to say I'm not buying at $1 yet, because once again, my friends, I'm going to be waiting for Bitcoin to take the next leg to the downside before I do start thinking about buying KDA. But with that being said, in the immediate short term, I do think the weekly, we're probably going to lollygag for a couple of days. In my opinion, on Sunday, Monday, we're going to open below 160. We're going to rock it all the way down to 140, probably lollygag between the 140 and 134 range, maybe have a bounce, head back down to these lower regions in the next month or two. So this is what I think is going to be playing out for Kadena. This is how I think the bear market low is going to play out, something like this. Obviously a rough sketch with some drawings to some data points, but nonetheless, something like this is what I see playing out for KDA. I don't think the bottom is in yet. I think we've got a long way to go. Are we going to bottom at 1 KDA? Do you think we're going to bottom at $1 for KDA? Let me know down in the comment section down below. But as of now, I will be sitting on the sidelines until Bitcoin makes new lows. That will tell us all we need to know about the best price that we can buy KDA at. So, as always, my friends, that is all I've got for you for this KDA update. Cowboy out. Peace.